from the article that is coming. That's what at least one financial expert is saying. Charles Brown of CB3 Financial says,
one of the brilliant moves that Kmart has done is to partnership with Facebook in these e-gift certificates, so you can actually...
Of government mismanagement. Charles Brown is the president of CB3 Financial Group. He joins us this morning from Chicago.
Significantly dropping. Basically, this is the year of the consumer.
Believe that they're capable of managing anything?
Well, it's sort of like handing the keys to the chicken coop to two wolves. Good evening, everyone, from Nashville. It's Thursday, February 25th. I'm Charles Brown, Portfolio Manager with CB3 Financial. We are so glad you're with us tonight. From COVID, U.S. politics, and the world economy to clarity. This is CB3 Live. I'd like to welcome those who are new to the show tonight. We've got a new listener from, I think, the suburbs of Chicago. Lily, we're glad you're with us for the first time. Tonight's show, the vaccine machine. Man, is this thing moving along. Exciting to see that. Earnings, yearnings. Yeah, we've got some great data there too. It continues to be strong, better than expected, moving the direction that we want. It's a great thing. If you're new to the show, please go to YouTube. You're probably watching it there now, unless you're on Facebook. And be sure to click the button that subscribes to us and then click the little bell so you get notified when I go live. Follow me on Twitter. I tweet it at least every day, sometimes twice a day. And of course, you can see us on Facebook and LinkedIn. Our LinkedIn audience continues to build. We're glad for that. In Corona America, what's going on? Love these green numbers, guys. Almost 67 million vaccinations. Total confirmed cases, 28 million, so now it's well more than 2 to 1. These are the numbers we want to see. And yes, I'm not ignoring the bad data on this page, but you can have other news agencies somewhere else focus on that. What I want to focus on is the trajectory, and the trajectory is good. 13.6, approaching 15% by the end of this weekend will have vaccinations. Now, doses given and total doses distributed are different numbers because literally the distribution has outpaced the ability for the administration of these, administering, I should say, of these vaccines. And that's not good, but it means that there's plenty of stock. So if you're wanting to get a vaccine, get on the phone, get yourself in line and get down there. Many of the people on this program have already gotten their vaccines. I'm showing you this chart as long as they keep providing the data. This is from the COVID tracking project. I love these negative numbers. Remember, most of the time we like numbers going up, but here the negative numbers work really well. Weekly tests, okay, down, meaning not as many people needing to be tested. Weekly cases down 25.5%. Weekly hospitalizations down almost 18%. Weekly deaths down just under 21%. This is positive data, guys. I've been saying for more than a month now, but I believe that that apex in the middle of January was the peak in this third wave and indeed the pandemic itself. If you look at a moving average here, you'll see there was just a tiny bump at the very end of the chart there, but we're still very strongly moving in the right direction to get COVID-19 in the rearview mirror. At least as a pandemic. It could well be with us for years, but as just one of many medical conditions to which we as Americans are susceptible. So it's hard to believe that just a year later, not even quite a year later, we might have a choice as to which COVID-19 vaccine we want to get. Pfizer, Moderna, AstraZeneca if you're in Europe, and now Johnson & Johnson is on the horizon. We're going to look into that right here. So the FDA is hoping to quickly authorize these booster shots. So if you've been vaccinated and as these new variants, we talked about this several weeks ago, the variants are variations of the actual strain of COVID-19. But as these emerge and as they essentially propagate to various parts of the country, you might actually have to go back or be advised to go back to get a booster shot. And I think that's positive for people that want to have this vaccine. The booster is a nice additional choice. Pfizer, clearly the leader here, pushing toward $15 billion in revenue. I mean, it's not really a money-driven thing, but it's because of the success of what they're doing. Basically, Thursday and Friday, this wave of news is coming out saying that they are the #1 vaccine in the world right now as far as success, testing, administration, etc. And all that's good. So equally effective on young and old. Now, we've been talking about this for months, that various vaccines, and there are a total of 4 right now, 2 that are in prevalent use, AstraZeneca in Europe and Johnson & Johnson just emerging. But some of them do better within certain age demographics. And here you can see that Pfizer's has been proven to be equally effective, young and old. That means for toddlers and 80-year-olds. Some work better for different races. Some, based on comorbidity cases inside people, people that have more complicated medical situations respond better to certain of the vaccines. And that's a good thing to have this kind of choice, all right? So Pfizer and BioNTech, basically with the Israeli testing. So Israel is one of the strongest countries out there to get the vaccines, get them administered. So well over 70% of Israelis right now have the vaccine, and the ones that have wanted it have been able to get it. And of course, it's a much smaller country than the US. But the first real world indication that over a broad span of their population, which is still in the millions, is going to curb the transmission, not only of people recovering who have it, but people that don't have it not getting it, and stopping the transmission from one person to another. Obviously, that's been an issue. Even people without symptoms have been transmitters, and that too is being reduced. All good news this week. It's kind of nice. That's why I'm calling it the vaccine machine, because it's just really on a roll. Johnson & Johnson now, what makes them stand out? They're the first company. So in addition to their testing, they really entered the medical market here for COVID as a testing entity. But their vaccine is the first single-dose vaccination. And they're expecting to get emergency authorization later this week, maybe early next week. Just awesome news here. And they think that they're going to be able, once they get authorization, possibly early March, by the end of March, have enough for 20 million Americans. It's an incredible number to have literally in just a month's time. So if you add up all this data, AstraZeneca, Pfizer, Moderna, and Johnson & Johnson, we're looking at 130 million people, enough vaccines for that many. Remember, that does not necessarily mean that 130 people will be able to stand in line and get the vaccine, but it means the doses are available, and that's a huge positive. Pfizer and Moderna still require 2 doses, okay? So that's 2 trips. But for most people that want to, have the assurance, or at least a high level of insurance, that they're not going to get this pandemic, it's worth that wait. I'm really interested in the Johnson one myself, so we'll see. Now you guys get a chance to pipe in. So multiple COVID-19 vaccinations. Again, never thought I'd be saying this when this pandemic rolled out. What does it mean for you? Answer A, vaccines are now safe for all participants. B, I will be able to choose which vaccine I want. C, vaccines are still on a you can get what you get basis. In other words, you can't choose. Or D, it doesn't mean anything to me because I'm not going to get vaccinated, okay? All right, there's about a 20-second lag. Let me look in the chat box and respond if anybody's got any questions here, comments. Hey, Greg from Sugar Grove, good to see you. And anybody else? Not any questions so far. Remember, you guys can ask me things in the chat. I can get back to you in our segments here when we have little breaks. Hope you guys are staying warm out there. The weather broke dramatically here in Nashville. We had 7 inches of snow the day after last week's show. It was crazy. There are no plows here. So we were all just sort of boxed in around the fire and looking at our cows in the backyard there. So We got a D, okay? I will not get vaccinated. We got a bunch of D's here, okay? Alice is a C. Get what you get. Keith Day, a D, okay? A with some caveats, kids may be an issue. Yeah, I hear you. I hear you, Doc. Yeah, that's not my concern, but I can understand why it would be with your grandchildren. Tom, you got a C, Connie a C, and Deb an A. Yeah. Okay, so there is a perception issue out here. And I can't blame the media. I think that because this was an emergency use only approval, many people are thinking, well, why don't I just wait for the new software version? I've used the analogy on this program that when the software upgrades from version 1 to version 2, you might want to wait till version 2.1 to buy it. And candidly, that's the approach I'm taking. So I know that I'm now eligible here in Tennessee. I know the number that I need to call, but I haven't called it yet. We'll see. We'll see when that happens. But I'm encouraged. Thank you guys for that info. We got some more answers. A and D. Okay, wide variety there. Just like we have a wide variety in our audience. So the world economy, guys, what is going on here? The Russell just continues to just thrust itself out ahead of the other three indices. NASDAQ at 5.5, S&P 4.5, Dow 4.4. Now I need to say this is yesterday's close, not today, which is a real big down day. We're going to address that in just a few slides. But for the year, I mean, you're looking at the Russell 3 times the return of the other indices. What does this mean? This means that and I just keep saying this, I feel like a broken record. I talked to some people this week who said, maybe we should get into treasuries, or maybe we should even short stocks, reading this or that from various people out there. I always say, if you guys read something, send it to me. And this particular person did, and I'm reading it because I want to be able to respond to what these news people or investors are saying to you guys and what you're reading. What you see on the screen here is carefully researched. And in the next slides, you're going to see my actual account values like you do every week. We're investing for our family office. And those of you that are clients, you come along with us, beside us, and we're investing the same way. I wouldn't put my whole family net worth at risk by making a poor decision. I'm not going to take you guys down with me, okay? So it's important that you realize that the data that you see here is authentic. I have no agenda other than to bring you what I see as the truth. It doesn't mean I have a crystal ball, okay? So what's the methodology? I've started showing this, especially for new people like Lily tonight. What is our investment philosophy? The CB3 investment philosophy is to periodically evaluate the 11 S&P 500 sectors. We do some international investing, but mostly in the U.S. And then the industry groups, then select leading stocks from these leading industry groups from the leading sectors. Make sense? It's called a top-down approach, okay, as opposed to bottom-up, which means you look at the stocks first. We don't do that. We look just like I described here. What our hope is and what our intention is that we will participate in the momentum that is generated by these winning stocks, because other people that have our particular philosophy are going to buy them as well. And they're going to invest, as we are, where Wall Street is bidding higher. We do not ever try to fade or go against Wall Street, because they have billions, arguably trillions of dollars to invest. And we're not going to go against that. We're going to coattail them, okay? And thus, we and our clients want to share in that wealth generation process. So those of you that watch the show every week, you know, again, that I am a registered investment advisor. If you're a client, you already know this. This is my actual statement for the program we call CG at Interactive Brokers. If you're new to the program, if you want a copy of my statements, I'm very transparent. This is year to date in capital growth, okay? If you're interested in the methodology of these programs, I can answer those one-on-one, CB3 at cb3.com. Up 8.5% for the year. Again, a little bit less than this because of today. I'll always use previous day's data because the data is not generated until about 6 o'clock, an hour before I go live. Okay, SG just absolutely killing it, 15.5%. Different methodology. Those of you that have SG counts saw quite a few trades this last week as I evaluated and added even more small cap stocks. And that's one of the reasons why SG has had such a good year, is it migrates more to the small cap stock space. Okay, it doesn't do any good if everything's in the same assets. Okay, so let's look at this chart. This is the S&P 500. Okay. Now, if you look in carefully, I'm going to go as far as I can without hitting my mic. You'll see those little red bars there. That's what's happened the last 2 weeks. So these have not been a pretty 2 weeks. But I have highlighted in yellow a few weeks back. Okay. So what happened there is the same thing that happened back in December. The same thing, obviously, if it happened in March, and you just see these pullbacks all the time. And the reason they feel so ugly and they don't look so bad on the chart is because emotionally it's very easy to just process something on a chart and go, yeah, that's a pullback. But when you're actually going through it, it's sort of like looking at one of those rides at, Six Flags Over America and going, yeah, that looks pretty interesting. But when you're actually on the ride, it's a very different experience, okay? But the point is that recency bias can cloud our judgment. Let's look at this chart. I show this chart at least once a month. This is a 100-year chart showing a secular bear market in red there on the left-hand side. That's as we entered the Great Depression. And then we had 20-some years, basically from 50 to 70, of a secular bull market where the average return was 11.5% per year. Okay? Now, we entered another secular bear market from 70 to about 80 and then broke out of that, and you guys know what happened then, okay? Everybody probably on this call has been paying attention since 1980 on. It's a 100-year chart, right? So the average annual return, 15.4. I know the numbers are tiny, but it's just important that you see the arrows. And then we entered another secular bear market. When the market went down in 2000, tried to break out in 2007, and then we all know what happened in the financial crisis. It broke out on April 10th, 2013, and that is the current bull market in which we are at this time. The return so far per year has been 13.2%. You can see based on the last two secular bull markets, I expect this to continue probably through the end of the decade. Will there be downturns? Yes. Look at the chart. You'll see that there were downturns in those secular bull markets as well. But I think overall it bodes well. What's leading right now? The Russell 2000. PE ratios are getting a little bit higher in the Russell right now, but I'm not concerned about that because, again, for a secular bull market to really work for a long period of time, all the asset classes have to perform well. The Dow Jones Industrials, which had the worst performance last year, actually hit a lifetime high yesterday, while none of the rest of the markets did. So even the Dow stalwarts, you even hear the phrase dogs of the Dow, the big industrial titans that are not the fancy Teslas or the Neos or the Nvidias that are in the NASDAQ. But even those stocks in the Dow were making lifetime highs, and that's a real strength. Sorry about my headphones tonight. Sometimes my headphones just don't want to cooperate. Okay, so what we look at is where can we get yield? If we are looking for growth, we're not looking for yield. So we are heavily invested in the communication services, the Facebooks, the Pinterest, those kind of companies. Consumer discretionary, which is where people have money to spend in a discretionary manner, not a staple. Okay, and information technology. The reason these are red on the screen is because those companies are taking their money and using it to do R&D to make more and better widgets. Okay, whatever it is they make. Those are the companies we want to invest in to grow because they're the ones that are going to have earnings surprises. We'll get to that slide in just a little bit, and we want to be with them. Yes, you can get a 4.7 return in energy. You can get a 3.4% in utilities. But the actual appreciation of the stock is not strong enough to offset what you would be losing in these other sectors. For people that say you need to be involved in all 11 sectors, I strongly refute that. That's called worsification, not diversification, okay? That's the methodology, all right? What's the featured stock? Enphase. This has been with us for a while. It's the second leading performing stock in CG, right behind Tesla. Enphase is a solar company. So they make those little cells that go on the roof. They're not actually part of generating the actual, turbines or whatever, but they make those little cells that gather the sunlight and then other people, put together. It's a production line. But they just, have a clear runaway growth plan that's basically counting on some, subsidies. And of course, now with the Biden administration, people even approached me this week and saying, well, with Biden in office, he's going to be anti, this, anti that. Well, not on renewable energy, he's not. I mean, Enphase has been really strong since the election, and other renewable energy companies have too. I'm trying to avoid the politics of that right now, but the reality is we want to be in this space if the price is going up, and we want you to be in it too, okay? That's why we do it. I said I would come back to Texas. It was just a mess, folks. I mean, this is something I would have expected, and please, if you're from these states, don't be insulted. From South Dakota or Arkansas or West Virginia or something, less developed states, okay? But Texas, really? These power bills, you're seeing $9,000 per kilowatt hour when the average price is $25 because that's what the market was, demanding. And now this Texas Power Grid chair, 4 people had to resign, and the governor was encouraging that, receiving death threats. I mean, we have family in Texas. We have, actually, Alice has 2 sisters, and her parents live there. Every one of them was without power, and every one of them for a short period of time, and actually one of them for more than a week, was out without water. I've never been without water for more than a few hours in my life, and that's only because I lived in a condo and they had to do a sewer job in the front, okay? But a week? I mean, it just seems inconceivable to me. They're going to have to figure this out down there. And so, again, not trying to pick on Texas. We like Texas. But the reality is, this is going to bring all the energy issues to the fore. So what actually happened here? I mean, you were hearing, well, it's all renewable energy's fault. That's just not true. First of all, their power grid is highly decentralized. So utilities are not encouraged to overproduce utility and store it. They're basically first in, first out, just in time delivery, and they just get paid for what they sell. Well, if you have no incentive to produce overage, you don't have a backstop. You don't have any extra inventory of electricity. I know this seems strange where you can actually store it, but it can be. Okay, so these widespread failures were due to freezing of gas lines as well as solar and wind failures, but it wasn't all the solar and wind generation. Still, we are in a position in this country where we can't just stop producing fossil fuels for energy and switch over overnight. I'm not going to offer an opinion about whether that was done too quickly in Texas, but whatever was done, it was a travesty for the people of Texas. I do have a really cool story for you, though, about Texas, and you'll get to that in just a little bit. So, economic indicators for the week, consumer demand just coming back. Again, people have been pent up. It's a year now. So people have saved their money. They're getting these, nice checks from the government, frankly, to, keep them, intact, to pay bills down. Savings rates are up. You saw that in last week's show. Actually, the last few weeks, I've been talking about the saving quotient. So consumer demand, discretionary spending is back up. Again, that's why I'm investing in the consumer discretionary sector and not staples. You don't see P&G in my portfolio and a bunch of energy companies. It just won't happen, all right, or even utility companies. The growth is in discretionary spending. The Federal Reserve reported that industrial production, the biggest component of which is manufacturing, is now just below its pre-pandemic level. Again, there's your V correction, guys. We've been talking about V corrections, and I've probably shown you 20 or so in different areas of the economy where this kind of recovery is coming through, and it's just awesome. Consumer confidence, okay? If consumers are confident, they spend. If they're not confident, they don't spend. The key takeaway from this report is, okay, so things flattened out for 3 months. First time in 4 months it's up, but that's because I think consumers are seeing an improvement in the labor market. We're going to get to that in just a moment, all right? So what is one of the reasons? I've not shown you this chart before. Well, ever since the baby boomers came of retirement age, look at this chart. The number of people who have left the labor force because retirement. If you ever wondered just how big the baby boomers were, this is how big. I'm squarely in the middle of that, by the way. I was born in 1955. But look at this bump at the top. I think this is boomers basically being laid off and saying, you know what, maybe I've got enough savings. Maybe we can change lifestyle. Maybe we're just going to stay at home. It's really been kind of cool. And a lot of people retiring, all right? With that being the case, you wonder why unemployment has fallen the way it has. And while jobs are going unfilled, this is one of the key reasons, guys. And as an investor, I need to know this data because if they're retired, they're going to be spending their money differently than if they were still working. And frankly, it's good for us because it's discretionary spending. I always end the economic section with this chart. These are the number of S&P 500 stocks that are beating expectations. You guys that have been watching for a while know, but that number is around 73%. By the time we get to the end of the quarter, which will be March 31st, that number that are beating their estimate should be about 73, 74%. It's at 82. Look at the second line, 399. We're going to call it 400. 80% of the S&P 500 has reported. Okay, so it's going to take a lot to pull this down to 73. So what does this mean? This means we're going to have a year after the pandemic started, that solidly beat earnings expectations. If that's the case, do we need to be pulling money out of the market and setting it aside because we're scared? No, we do not. That is the data. That's the data that we trade on. U.S. housing, by the way, if you guys weren't here last week, the ones of you that were, I thought we had a really good interview with Susan. Go back and watch my show from last week. What a wonderful interview. And Susan was just fun to have here. But the U.S. housing market, which we talked about then, and I'll just give you a few slides here. Single family homes, we're not back to 2005 yet, but boy, the trajectory is certainly working in the right direction. And there are a lot of reasons for that, which I've talked about literally for 6 months. Low interest rates, people saving more, banks being more accommodative, and people realizing, I kind of like it at home. So let's either A, improve our home, or let's move up to a bigger home, or let's sell our home where we are, often in the north, and move to the south where it's warmer. Many states in the south, like the one where I am, have no state income tax, etc., lower property taxes. New home sales increased 4.3% at an annual rate of 923,000. What do you say here? Year-over-year basis, home sales up 19%. Who in the world would have sat here a year ago on this date and said that in a pandemic, in a recession, because we had the recession just about as strong as the pandemic was just in a few weeks because the market moved down so quickly. Those of you that were with me and watching the show remember that, okay? The key takeaway from this report, though, is that new home sales are marked from when people sign. So that's not closing sales, but still, it's a very strong datum point. And the South, here we are, remains the hot spot for relocation, evidenced by a 40% increase. I didn't have this data for Susan last week. I'm sure she would have crowed about it being a Nashville realtor. But good data, guys. Interesting piece here. I've not shown you this. This is from Fred, and that's not Flintstone. That's the Federal Reserve economic data. This is showing the number of new homes sold between $500,000 and $750,000. Do you see people getting timid and downsizing or saying, I really can't afford that. I'm going to just, go in with the minimalism here? I'm not seeing that data. In fact, I'm seeing this almost as strong as it was in 2016, way before the pandemic. Again, when people are confident, they're willing to step up and spend money, and that's what we want to see. U.S. existing house prices, okay, divided by median income. So I see the bubble territory there. Yeah, I know there was one in 80. I know there certainly was one in 2007, but this increase has been more measured, and that's why I'm not concerned about the increase in home values, what we talked about last week, which is just almost insatiable demand. Way more people wanting to buy homes than there are homes available for people to buy. I like to see this kind of subtle here as opposed to this huge straight up line from 2000 to 2005. That, if you remember, guys, was because of the what's called liar loans, where you didn't have to qualify at all. You just basically had to be breathing, fog a mirror, and you got a loan. Well, those are gone. Those days are gone, and the people that are borrowing now are credit worthy. Many of them in this market, I can tell you from Susan last week, you guys remember, they're paying cash. Okay, they're paying cash. Toll Brothers, one of the biggest national builders, not regional, but national builders, just say their orders are just jumping, okay? They're just expecting a 59% jump from what it was last year at this time. The problem is they can't find land. In fact, I just texted Susan to say, it's been a week since what can you give me now? She said, we can't find land. It takes so long to get a farmer to sell his land. That's basically where it's coming from, because they're moving out away. And it's not just Nashville. It's happening in Austin. Austin's a huge market. Same thing in Phoenix. Okay, but it just takes a while to get this done. And meanwhile, people are pouring in from other parts of the country and want to be here. Okay. All right, the Fed. So I put this graphic on here, and Alice said, so what does that mean? Well, I always talk about the Federal Reserve. You know that guy at the top, right? That's Jay Powell. Right, he's the chairman of the Federal Reserve. Do you know that there are 12 districts? And that map's a little distorted because a whole lot of the offices for the Fed are in the East. You got San Francisco there covering what, 8 states? Minneapolis, covering Montana. They probably should expand this, but they haven't. So there's 12 districts for the Federal Reserve. That's a little education for you if you didn't know that. All right, so what is the Fed saying? Basically, the market loves it when Jay Powell says, I think we need support. I think we're going to keep buying Treasury bonds. I think we're going to still keep quantitative easing. And his testimony, which is twice a year, basically said, we got a long way to go to get to our inflation, target. And I just want to remain accommodative, which is a blah, 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 blah way of saying, we're not doing anything. We're leaving interest rates low and you guys just keep spending. Come on down. Just keep spending that money. And so the X factor, if you will, for the chairman is that he basically said, buy the dip when it happens. And we certainly had a dip these last 2 weeks. We'll see if people step in to buy it. I don't see any reason why they won't. We've done some stepping in and buying here. And I've got some other clients that have added some money to their programs this week because they're buying the dip. Why? He can't actually say buy the dip, as you can see on the screen. Okay, but if the Fed needs 3 more years to reach their inflation and full employment target, they're not going to tighten interest rates anytime soon. Certainly not in 21 or 22. And 23, guys, is far enough away that I'm not really worried about it. Okay? In the random data department, this is a new little segment here, just one slide, but I thought you might be interested. People say, were you in the 1%? Well, it depends on what country you're in. So if you're in Monaco, you basically have to have almost $8 million to be in their 1%. Switzerland, $5 million, and the U.S. is third at $4.25 million. So if your net worth is $4.25 million, you are in the top 1%, and you can see it goes down dramatically after that. I hope that's not a useless but an interesting datum. I'll continue to bring those to you in this little segment from time to time. Now, I started this last week, and I realize this isn't financial, but I just think we need to tell these kinds of stories, and here's why. Almost everything is financial at some point because, as I've expressed in here, consumer sentiment drives what people are doing with their discretionary income. They're going to keep buying baked beans and toilet paper and soap. But what do they use their money for on discretionary items? And if they're feeling good about life, if they're feeling good about their neighbor, if they're feeling not their next door neighbor, I mean that with a capital N. You guys get what I mean by that. If they're feeling good about their country, they probably are going to be more confident to continue to invest through their IRAs, 401ks, discretionary accounts. And I came across this story. One of our viewers did, and I'm encouraging you guys, send me these stories, okay? So there was a stranded delivery driver who was taken in by a Texas couple for 6 days. So I didn't memorize this story. I'm probably going to have to read this, but apparently on this particular weekend, and it was Valentine's weekend, this woman was delivering groceries, trying to make extra money, for her family. She got in the driveway. And again, this isn't in Vermont or New Hampshire. This is in Texas, okay? She realized the car was going out of control. She braced herself for impact. She crashed into this tree, although I guess it wasn't a huge crash because the tree was wiped out, but the car wasn't too bad. The house was, in decent shape. Of course, she apologized, took the groceries inside and said, I'll call a tow truck. Well, 3 hours later, AAA hadn't shown up. And the folks said, well, you can wait in here and, maybe you call an Uber or something. Well, another 2 hours went by and no Uber showed up. So long story short, they fixed her a steak dinner. They all, said, well, we'll get out of here in the morning. Well, the morning came. And of course, we all know that are down in this part of the country that had this rash cold spell. It was 6 days before she got out of there. And by the end As she said, the people that let me stay here were almost sad to see me go. I mean, those are the kind of stories that I think we need to hear. Okay, does it translate into money in your pocket? I don't think it matters. Okay, I don't think it matters. I think what I want to see is Americans not being bitter with each other and actually embracing each other. There's nothing political in this. Okay, it was a white couple that took in an African-American driver. It's just people. And it's people doing the right thing. And people being appreciative that someone else is doing the right thing. And we need more of that, in my opinion, in America. So I just wanted to share that with you, okay? She posted it on Facebook, day 5. They went up to day 6. So it's just cool. I just thought it was cool. I hope you did too. In the crypto corner, guys, I don't think we're going to see this go away anytime soon. So Michael Saylor, enterprise software firm MicroStrategy, he's a pretty big company, said Bitcoin is a lot more stable asset class than just 3 years ago. So the maturity for stocks took, decades basically, and from the 1800s to the 19s, and then of course it crashed in the 1920. But Bitcoin started in 2009. This whole crypto industry did not exist 13 years ago. It didn't exist. All right. So 12 is where we are in this, and you're starting to see institutional support. Whenever I turn on Bloomberg, somebody else is being interviewed, and how are you, approaching this? My accountant, my CPA just told me this week, Charlie, you're probably not going to like this, but now you have to actually sign a statement on the front of your 1040. This is a warning to all you guys, that if you traded cryptocurrencies, you got to check here under, penalty of perjury. Yeah. So the IRS is realizing this is an issue and they're missing out. So beware of that, okay? If you've traded, be sure you check that box. MicroStrategy announcing they're going to offer $600 million in convertible bonds denominated in Bitcoin, okay? And offering basically a blueprint for Tesla to purchase and do the same sort of thing. We already know Tesla had made a ton of money. Said that last week, that they actually made more money in the first quarter in Bitcoin price rising than they did in their electronic vehicles. Bill Gates had something to say about that, but I won't bore you, okay? So here's the thing. I've talked to a few clients this week, and I was kind of surprised, and if you're on the call, I'm sorry, but the people were asking me the things that they were. So I just want to know what you guys want to know, all right? Whoops, I didn't mean to hit that bar. Is there anything that I'm not telling you? Because I want to make sure that you understand what I'm saying. Whether you're one of my clients and you just want to understand what's in your portfolio, or whether you are investing for yourself and you're hazy. So you can have more than one answer here, okay? More than one answer. Answer A, I want to learn more about why CB3 chooses the stocks we do. Answer B, how to decide when to buy and sell. Whether that's what I do or for you, I can't tell you how to do it, but I can show you what I do. Answer C, why I'm not a fan of bond assets, and I am not. And I can tell you why if you want to know. And D, I still want to know more about crypto. So, all right, guys, you can have more than one answer. And Alice, if you're there, would you please jot these down? Just jot down the letters so I know what we're getting here. I'm going to scroll backwards, see what I've missed here. Hard to hear me. I'm talking right into the mic. If you guys are not hearing me, let me know, okay? If there's an issue, it should be, let me check levels here while we're doing this, okay? Oh yeah, you know what? I am a little bit lower. Let's see. Thank you for that heads up. Wow, I should have caught that earlier, guys. I am so sorry. All right, now that should be a little bit better. Okay, let's get some answers here. We've got D from Nellie, D from Charles, D from Debbie D, C from Alice. Alice, take these down, please. A with some caveats. Kids, oh, I'm sorry, that was different, different question. Okay, C, why I'm not a fan of bonds. I'm happy to tell you that, okay, and I'll even touch on it in this. Good to see you, Ice, glad you made it. The Master's Dad 1, I don't know that address, but hey, good you're here. How low do you think Apple and Tesla will go? I'm not going to pick a number on that. I can tell you the exact low of Tesla and the exact low of Apple. when the last seller sells. Because when the last seller sells and there's nothing but buyers, it's going to go straight up. Both Tesla and Apple are strong, strong companies. I am very bullish on both of them for the long run. We are not day traders. Okay, hope that answers your question. Thanks for asking it. People are generally good, Nellie. You know, I'm trying to believe that, but thank you for saying that. Okay, do something nice when no one is looking. That's exactly right. Paying it forward is what that movie was called, right? Dr. J, happy we picked Nashville over Texas. No kidding. Give me some feedback, guys. I turned up the mic. I'm really sorry about that. I didn't see it. It's somehow that setting slipped on me. I hope you can hear me better. More stories like that, Debbie B. I will do that. I got a Debbie B and a Debbie D. I got to be careful here. So, yeah, it was a cute picture with the dog. She actually slept with the dogs because that was the room where they normally slept. So this stranger, you know, had dogs on either side of her. And that, it's just a great story. You guys can find it. It's from the Washington Post. Not exactly a bastion of conservative thought. So, you know, again, I like to see that out there. B and D, how I decide when to buy and sell, and crypto. OnPass Trust CBT, that's good. We trust them, they trust us. Hey, Dennis, good to see you. How to decide when we buy and sell, I'll talk about that. B and D, we've got quite a few B and D. A and B, okay, from Connie. A and B from Greg. I cover all these each week. I try. Jerry, good to see you with B. Hey, Karen. And a B, Alice, hope you're getting these down because I'm going to try over the next few weeks. So I don't know if you guys know this, but we're 2 weeks away from our 1-year anniversary. I got a little special announcement at the end of the show about that. Thanks, good on the audio. So now you're loud. Okay, well, I'll back off a little bit. So very good. This is good, guys. Thanks for all these answers. We really appreciate it. We're here to serve. We want you to be educated. We want you to feel comfortable if you know what's going on, even if you don't know how to do it. You know, maybe I've told you this story, and forgive me if I have, but I was in this thing called BNI. I think there's someone on the line that knows about BNI, maybe more than one. Business Networking International. And, you know, this one guy, he called me and he was in the group, you know, and he said, you know, I just want to throw this out to you. We have this class and, you know, it's how the basics of an automobile work. And you'll probably be in there with, you know, a bunch of ladies because that's who comes to the class usually. But you don't strike me as a guy that doesn't know much about cars. He was being nice. And he was right. So I went to the class and, you know, I learned a lot. And I still would never try to fix my car. I wouldn't even change the oil, but I at least understand how it works. That's what I want to do for you guys. You might not want to do the research and understand the beta and read the charts and read the plethora of things that I do, but you at least want to understand what's in your portfolio, because if you have confidence that it's been picked with care, whether I'm doing it or you're doing it on your own, then you're going to be able to withstand these emotional times like these last 2 weeks when, for whatever reason, the market is selling off. It's going to happen, guys. It's going to happen, okay? All right. Politics, 2021, interesting times. Romney, this must have just choked him to say this. Romney says Trump would win in 2024. He'll win the nomination, not the presidency necessarily, but he'll win the nomination if he runs. If that is the case, it would be only the second time in U.S. history that a president has run again. Grover Cleveland did and won. But even if Trump didn't win in 2024, it'd be only the second time in history that a president had a split term like that. We will see. We're way too early to see what would happen here, but it could happen. Elsewhere in politics, this Jimmy Panetta from California are basically kind of blasting Biden because they want him to release his sole discretionary power to, you know, basically set off the nukes. Well, they said that about Trump too. I don't know what they said about Obama, but we'll see if anything comes of that. A little more concern to me is that Biden has said that he plans to cut U.S. oil production. And hours after taking office, he basically stopped development on the Keystone Pipeline. Later in the day, he told the Interior Department that only the top agency leaders could approve new drilling permits for 60 days. I'm sure that'll be extended too. We have viewers in Montana who said, this is affecting our county, and you can be assured that no Democrat likes that decision because they will not win a local election because the person running against them, whether it's a county in Montana or a state, will bring up that President Biden brought hardship to their state. I'm sure you've got an opinion on it, and there's nothing wrong with that, but I'm just telling you, that's what one viewer mentioned to me. So the Louisiana GOP representative said to Biden, you know, this whole mess in Texas, try living without oil and gas. Basically calls on Biden to remove this H-149 because Biden is now saying he wants to remove the White House from the electric grid, and install windmills on the South Lawn. I'm sorry, guys, I'm trying not to laugh to say that. It just seems a little over the top to make a point. The reality is that, and we have people on the show here that remember my music days in my recording studio and my humble start with a 4-track and then an 8-track, and then we made the move to 24. We just didn't do that overnight. We thought through it, and we essentially morphed from one technology to the next. One, because people couldn't afford to just make the jump, and two, because the new technology was not as stable as the older technology. We're seeing that same thing now 40 years later. And I think it's important that you guys see this. This is a really short movie, okay? If you blink, you might miss it. But the reality is it's not just about oil in the sense of we put it in our cars and we run generators with it. There are a whole lot of byproducts, and imagine what the world would be if we didn't have any access to petroleum byproducts.
He's through. He got him napping, and now it's an open field ahead. 35, 40, what a block, 40 yards.
Have you ever considered how much your world depends on petroleum-based products?
So I don't really know if all of those products, I didn't stop the film and go through it and see if all of those really were made from petroleum, but it was enough to get me concerned. So it's hard to really read Biden and the current administration's mind as to they just want to stop fossil fuels from being used in cars, or is it going to permeate to all these other products? Because if that's the case, we've got some work to do to come up with synthetic plastics and other items, okay? So what do you think about fossil fuels? A, they're necessary for now but need to be replaced with renewable energy. B, are no longer critical to the U.S. energy grid. C, are a necessary evil for some states, but I sure don't want them in mine. Or D, were a big part of the problem in Texas last week. Feel free to respond. This is one of those where you can put more than one answer if you want to do that. Okay. Let's see if I missed anything from earlier. If you've got just a one-off question here, now's the time. Type it in, guys. Let's see. I answered the one on Apple and Tesla. Love those stocks. Just not a concern, guys. EV is going to be with us, and Apple's going to be with us. The 12 Pro and the 12 Pro Plus, huge. I've got them and just love them. Great products, and they're selling millions of them. And as they move to their own processors and get away from dependence on third-party processors, I think it's all uphill, or good, I should say, for Apple. Okay. Okay, good. So we got the audio figured out here. What else? Now I'm loud. All right. Okay. What else? Into crypto. That's from the previous question. I'll do more on crypto. We've got a little regular comment here. So column, crypto corner. So replacement will take years. It is, okay, necessary now, but need to be replaced. Deb Billis is an A, Karen A and D. Yeah, okay, remember we got an E here from Keith. I'm not sure what the E is, Keith. Fill us in, okay? Charles got an A, Martha A, Thomas A. A lot of A's, okay? And for the future. Greg, thank you on that. Connie, want to see renewable resources, tractors and combines? Yeah. Think we'll always need oil. Well, always is a big word. Certainly in our lifetime, any of us that are on this call that are young, I think ICE is somewhere in the 20s there, but for most of us, there's going to be fossil fuel as long as we're alive. But just like, I'm sure the people that were telegraph operators, like my grandfather that had a job in Fort Pierce, Florida in 1913, thought he'd be a telegraph operator forever. Well, how'd that work out? We really can't look into the future as far as we'd like to. Everything didn't work out the way the Jetsons cartoon said it would, okay? But certainly for the foreseeable future, I agree with you, Nellie. All the above, I don't want to live without plastics, but I don't want to burn them. Yeah, I hear you. Capital A from Dennis. Thank you, sir. Jerry, A and D from someone in Texas. Yep, I hear you. Keith, true, Nellie, good. Okay. We're seeing about that plastic. We're interested in any industry and in investing in any industry that's pushing forward renewables. But let me finish my sentence before I go to this next slide. Interested in any product that can bring a better quality of life, that's safer for the economy and the ecology, but not have what happened in Texas. And I understand that there's natural gas problems down there and petroleum problems, but there definitely were wind and solar issues too, guys. So anyway, they're gonna figure this out. All right, so as I just said, in 2 weeks we have our 1-year anniversary, and I am announcing in advance here a special guest for our 1-year anniversary show, Lydia Thibodeau, CEO, Boston and Chicago Collegiate Nannies. Lydia's job, and it's a very successful career, and she's young at 33, is placing nannies in homes in Boston and Chicago. Now, she told me a story recently of how she had a nanny. So the problem is not for her to get clients. I mean, most of us struggle to get clients. She didn't have any problem with clients. She has difficulties finding nannies that want to work for $100,000 with benefits and vacation. And like I showed you last week with Susan, where people are bidding, 5-7% over $80,000 over list price. This is one of those incredulous stories that I think is really going to interest you. So be here next week. That'll be the last show of our first year. And then on the 1-year anniversary on March 11, we started March 12, 2020. Lydia Thibodeau will join us. Okay. Excited about that. As I always end every show, for we have not been given a spirit of fear, but a spirit of love, power, and a sound mind. It is my deeply held belief, folks, that we will not only survive this pandemic, the political chaos, the world economic upheaval, but we will come out stronger as individuals. This country will come out stronger, and a new day is coming, and it's gonna be a brighter day. It is. And that's our show, guys. That is our show for, let's see, what is today? Thursday, February 25th. All right. And so, it's just been great to see you guys every week. I hope that you'll come back, and I really hope that you'll bring some people with you. Okay. I'm hesitant to push this too much, but I really hope you will. We think we have a good program. We think we're bringing a value to you guys. And, we just want you to be here. And still keep losing my earphones here. Hope you'll forgive that part. I'm going to get a new set of earphones for next week. But we love doing this show for you guys. We've had a really great blessing being able to do this, to be here almost every week, to keep you guys encouraged as to what's going on in the U.S. economy. And I hope to bring that to other members of your family and say, hey, tune in. Here's some optimism for a change. All right. So come back next week. And again, just reminding you, at CB3 Financial Group, we don't just manage your assets, we become one of them. From COVID, the U.S. political scene, to clarity. This is CB3 Live.